Welcome to the Explainer. So, if you've ever stared at a financial chart and just felt completely, utterly overwhelmed by those jagged lines, the flashing colors, and the sheer unpredictability of it all, well, you are in exactly the right place. Today, we're taking a journey together. We're going to start with this massive, high-level map of the entire financial market, and we're going to funnel all that absolute chaos down into one single, specific, and highly actionable trading pattern. By the time we wrap up, you won't just be staring at random lines anymore. You'll actually be reading the story the market is trying to tell you. Let's get into it.
Okay, let's dive into this. Here is our roadmap for today. We're going to start with a trading roadmap itself. Then we'll survey 9 core strategies, narrow our focus down to pattern and breakout trading, dissect the exact anatomy of a bull flag, and finally, we'll wrap up with some golden rules for beginners. We know exactly where we're going, so let's get moving.
Section 1, the trading roadmap.
Listen, surviving the financial markets, whether you're looking at stocks, Forex, or commodities like silver, it requires a clear roadmap before you even think about making a single trade. Think about it. You wouldn't just drive into a massive, unfamiliar city without a GPS, right? Well, you absolutely shouldn't put your hard-earned money on the line without a solid plan. A trading strategy isn't just a hunch. It's not a gut feeling. It is a well-defined plan. It details the exact rules, the specific methods, and the exact price behaviors you need to see to trigger an entry or an exit. It is a strict, undeniable roadmap. If the market doesn't meet your criteria, you just don't trade. It really is that simple. Now, what's really crucial to understand here is the distinction between strategy and style. Honestly, people mix these up all the time. Your trading style is the when. It's your time frame. Are you scalping in a matter of minutes, day trading over a few hours, or maybe swing trading over a couple of weeks? But your trading strategy, which is what we're really focusing on today, well, that's the how and the why. It's the specific chart patterns, the underlying trends, and the hard, unbreakable rules you use to actually pull the trigger. And that strategy stays the same regardless of whether you hold that trade for 10 minutes or 10 days.
Moving on to Section 2, 9 core strategies.
So what are the actual strategies out there? Let's zoom out to a macro view of the market. Experts generally agree that there are 9 common ways traders tackle market movements. Let's do a rapid-fire run-through of this market taxonomy. First up, you have news trading, which is reacting immediately to data and geopolitics. Trend trading, where you ride the wave of a sustained long-term move. Range trading, playing a bit of ping-pong between support and resistance in sideways markets. Pattern trading, which looks for visual chart repetitions like double tops or flags. Then there's breakout trading, catching the rapid snap of a price level. Macro trading, dealing with global economic trends across asset classes. Carry trading, profiting off interest rate differences, basically low versus high yield. Contrarian trading, bravely fighting the prevailing market sentiment for reversals. And finally, mean reversion, betting that extreme overbought or oversold prices will snap back to their historical average. It's a massive menu, but it perfectly categorizes the immense breadth of the financial markets.
Let's move to Section 3 and see how this builds. Focus, pattern, and breakout. Okay, so we're taking that massive menu of 9 strategies and we're funneling all the way down to just 2, pattern and breakout trading. These two, they often go hand in hand, and they are incredibly approachable for beginners because they rely on actual visual evidence on the charts. First, let's talk about the breakout. Think of a market moving sideways as a total stalemate between buyers and sellers. Tension is just building and building. Breakout trading is the strategy of waiting for that tension to finally snap. You enter the trade when the price rapidly breaks out of that sideways channel, crossing a significant level of support or resistance. You are literally capitalizing on that explosive release of market energy. Now, pattern trading is the perfect companion to the breakout. It focuses on identifying specific, repeating chart shapes. We're talking about very clear visual structures here, like double tops, which basically look like giant M's, double bottoms, which look like big W's, head and shoulders, and flags. The true beauty of this strategy is the underlying assumption. Human psychology drives the markets, and therefore recognizable price action simply repeats itself. It doesn't matter if you're trading Forex, crypto, or silver. These visual repetitions, they occur across all timeframes and all assets.
Section 4, anatomy of a bull flag.
So we've gone from 9 broad strategies down to 2. Now we're zooming all the way in to look at the exact mechanics of one single, highly actionable pattern. Look at the chaos of a market chart and ask yourself, can you spot a flag in that mess? When you look at a raw daily chart for an asset like silver, it honestly just looks like pure noise. It is incredibly hard to see patterns in real-time markets before you know exactly what you're looking for. Our brains just aren't naturally wired to see the geometry in the financial chaos. That is, until we train them.
So let's do exactly that. Let's train our eyes. A bull flag is what's known in the biz as a bullish continuation pattern. Simply put, it appears right in the middle of an existing uptrend. The market pushes up hard and then, well, it needs a breather. It features a brief cooldown or consolidation period, but the ultimate goal, the expectation, is that the price will continue its journey toward the upside. Think of it like a brief rest stop on a really steep mountain climb.
Let's walk through the exact mechanical phases you need to look for. Step 1, the upward move. This is your flagpole. It's a strong, undeniable surge in price. Step 2, downward consolidation. The price sort of cools down and trades slightly downward, creating a little channel trapped between a support line and a resistance line. This channel right here is the flag itself. And finally, step 3, the strong breakout. This is where the price bounces off the bottom support and breaks violently upward through that top resistance line. Notice how the price action dictates every single step of this pattern. It's completely visual.
But listen to me closely here. Just breaking a line on a chart, that isn't enough. A successful breakout absolutely requires confirmation. First off, you want to see a strong green bullish candle breaking that line. That tells you buyers are firmly, undeniably in control. Second, and this is just as important, you need high trading volume on that specific breakout candle. Volume is the fuel. If the price breaks the line but the volume is super low, you know what that is? It might be a fake out. High volume is the proof you need. It confirms there is actual fuel behind the breakout.
Now, here's the crucial point. Even with a visually perfect pattern and incredibly high volume, trades can and will still go wrong. You absolutely must protect yourself. And this is exactly where the stop-loss order comes into play. A stop-loss is an automatic trading order placed to close your trade if the price turns against you. For a bull flag, you mathematically cap your risk by placing this order just below the lowest point of the flag pattern. Because think about it, if the price drops below that point, the pattern is broken, your original theory was wrong, and this order gets you out safely before a catastrophic loss occurs.
Managing that risk effectively is how you achieve a healthy ratio. Specifically, a ratio of 1.5. This brilliantly illustrates a standard target risk to reward ratio for a trade like a bull flag. Let me break that down. It means that for every single dollar you are risking, which is safely capped by that stop loss we just talked about, you are aiming to make $1.50 in profit. By structuring your trades exactly this way, ensuring your potential profits mathematically outweigh your protected losses, you literally don't even need to win every single trade to come out ahead in the long run.
Bringing us to Section 5, Golden Rules for Beginners.
Wow, we have covered a ton of ground today, right from that macro roadmap all the way down to the micro math of a stop loss. So let's leave you with some highly practical grounding advice drawn directly from expert consensus. This will help you start your journey safely. If you take absolutely nothing else away from this explainer, please take these golden rules. First, do not jump between all 9 of those strategies. Pick one, like breakout or pattern trading, and master it. Second, stick to one asset class initially. Seriously, don't trade crypto on Monday and oil on Tuesday. Third, keep your trading plan incredibly simple. Fourth, practice meticulously on a demo account until your rules become second nature. And finally, never ever argue with the chart. Follow the actual price action because in the markets, price action is king. Now, I want to share this particular quote because it's probably the single most famous investing quote of all time. Be fearful when others are greedy and greedy when others are fearful. That's from the legendary Warren Buffett. And it's a brilliant, absolute masterclass in contrarian wisdom. But there's a pretty massive irony here for those of us going through this explainer right now. While this quote is legendary, it is actually the absolute worst thing a beginner trader can try to replicate.
You might be wondering why on earth is that? Well, because Buffett is describing contrarian trading. That means purposely going against the prevailing market sentiment, catching a falling knife, as they say in the business. Fighting the trend requires extreme bravery, incredibly deep pockets, and decades of experience. For a beginner, it's not bravery, it's just recklessness. And this reinforces exactly why we focused our funnel today on simple trend-following patterns like the bull flag. You want to ride the wave. You do not want to try and stop the tide.
And just like that, that brings us to the end of our journey today. We've taken the sheer chaos of the markets, mapped out the 9 core approaches, and showed you exactly how a structured, rule-based approach like pattern trading actually works in practice. But you know, the next step? That's entirely up to you.
So, which of those 9 strategies will become your very first roadmap? The market is going to open tomorrow with or without you. The only question is, will you have a plan when it does? Thank you so much for joining me on this explainer.